Okay, now let me show you the W pattern, and then we'll get rid of this blank screen. I just, somebody had asked about the W in the 5-minute chart, and it made me think of our 3 variations of W's, right? So there's a W, just a stock that sells off, bounces, and sells off. Again, it comes back to kind of a horizontal level of support, and then the buyers start moving in, and we see this push to some new highs. So you have kind of this W pattern, right? It's a bottoming pattern. You also have another version where the W you'll sell off, and you'll see a bounce, and you'll see another sell-off, but the second sell-off won't go as low as the first sell-off. And then there's a third variation where the second sell-off actually goes lower than the third. And if you've seen me teach this before, I mean, some of you guys have heard this from me. Some of you maybe haven't. Out of the 3, which is the more bullish W pattern? There we go. See, I can't even trick you guys. Most of you are saying the last one, and there we go. 7 in the middle. You would think the middle, I'll tell you, logic would dictate that the middle one would be the most bullish because it didn't make a lower low, which, you know, there's something to that. The middle one, we had a low, then it couldn't make a lower low. That is certainly bullish, but the thing about pattern number 3 here is this area right there. When you have a sell-off like that, where it pushes to a new low and then reverses, what happens is you have a washout. It is where all the sellers have been washed out and things are moving to new highs. This is one of those little tidbits I picked up years and years and years ago, just traveling around, going to different seminars, and there was a guy that I went to hear speak one time he's a really good trader, and he threw this out, and I thought, probably like a lot of you guys, that this second one would be the most bullish pattern, and he explained, no, I mean, really what happens over here, that third pattern, is that if you do see that the markets or a stock break down to some new lows and then the buyers move in, usually the buying pressure is more of a, like a frantic, everybody piling in and driving things higher that causes a much stronger upswing than what you would get where you already had that higher low. So they're both bullish. It's just the one on the bottom tends to create more emotion and tends to create an initial surge that is even stronger. So you have a bigger movement before the next retracement, because we know as things go higher, they'll move up for a while and then they'll pull back and then move up, right? But this bottom pattern, usually the momentum is such that it's so strong you don't have the retracement as early as the middle pattern. So hopefully that helps and makes a little bit of sense there. Yeah, exactly. Mike's saying if it broke above that beginning area, even with the lower low, it has to be considered a stronger move. Yeah, it really is. So let me do this. Let's come back and switch back to charts, and now I'll jump over to that 5-minute again. So we have, as I look at this pattern on the S&P, we have a little bit of that, right? You see that the S&P right here, it broke down to a lower low. In fact, I looked at this, I was watching this, and I sent out some chart watch alerts, and I was kind of watching to see where things were going to go. It was a lower low, but it also was a Bollinger Band pinch at the time. So we didn't have a lot of clarity there, but it was over here on the right side when it started bouncing. And we see a rising 3-candle pattern right there, and we see the S&P closing above the averages and then pushes all the way up above the upper band. And to me, it's always the middle of the W right here. You can imagine I'm drawing a line off the top of this. When it breaks out above that, which happened right about there, that becomes your signal that, yeah, the bottom really has been completed and things are quite bullish and strong there. Does that make sense?